Hello friends, in the series on the income tax cases, today we will discuss a case in which a survey is made on the assessee. It has become a very regular phenomenon that whenever a survey or a search is conducted on an assessee, then the additions are bound to happen, whether the revenue has any basis for making those additions or not. In the present case also, the revenue find some loose papers on which the assessee has written some expenses, and the learned assessing officer compared these expenses with the expenses which are appearing in the audited profit and loss account and found that the expenses in the profit and loss account are much more than the expenses which are on the loose papers. So he made a conclusion that the expenses booked in the profit and loss account are bogus. So whether this approach without any corroborative evidence is valid or not, this issue has been taken up by Jaipur Tribunal in the case of Assistant Commissioner of Income Tax versus Nisha Jain. This case is reported in 120 ITR Tribunal at page number 441, and the date of the judgment is 5th August 2024. The facts of the present case are like this. In the present case, a survey was conducted on the assessee and a loose sheet was recovered on which the assessee has written some expenses. The case of the assessee was reopened under section 147, and while making the assessment, the learned assessing officer reached a conclusion that the expenses mentioned in the loose sheet and the expenses incurred and which are mentioned in the audited profit and loss account do not match. And since the expenses in the profit and loss account are much more than the expenses mentioned in the loose sheet, so he made up his mind and made the addition purely on the basis of the surmises that these expenses are bogus or the difference of the expenses is bogus. When this matter was heard by the learned CIT appeal deleted these additions. The revenue carried this matter to the tribunal, and the main contention of the revenue before the tribunal was that the assessee has admitted in the statement recorded on oath under section 131 in the survey proceedings that there is some escapement of income or there is some undisclosed income. The revenue also contended that the assessee has admitted in the assessment proceedings of some another year that the income relates to this particular year. But there were no corroborative evidence for this admissions by the assessee. When this matter was heard by the tribunal said that the document which has been recovered in the survey proceedings is purely in the nature of a memorandum which is recording some notes, and it is very common that these type of notes are prepared before finalizing the final accounts, and which is a very common practice. The tribunal said that it is not denied that the expenses were finally included in the final accounts, and revenue admitted that entries in the loose sheets exactly match with the final accounts. The tribunal said that the assessee maintained regular books of accounts. They were duly audited by the chartered accountant, and more interestingly, there was no adverse remark or any qualified opinion by the tax auditor of the assessee. The tribunal further said that the Central Board of Direct Taxes Circular number 387 dated 6th July 1984 prescribes the purpose of the tax audit, and the purpose of the tax audit according to that circular is to ensure that the accounts are properly maintained and such accounts faithfully reflect the income of the assessee. And since in the present case the accounts have been duly audited by the chartered accountant, so there is no question in lack of corroborative evidence that the expenses booked by the assessee are bogus. So, the tribunal also upheld the order of the learned CIT appeal who has deleted these additions. At the end of this video, once again I am repeating the name of the case. The name of the case is Assistant Commissioner of Income Tax versus Nisha Jain, and this case is reported in 120 ITR Tribunal at page number 441. The matter has been decided by Honorable Jaipur Tribunal on 5th August 2024. Thank you, friends.